There we go. How to file taxes, what are tax credits, what are the different types of taxes in the United States. We would ask, though, that you please do not ask questions that are very specific to your personal situation. Do not disclose, for instance, your address or any personally identifiable information. And there's several topics that aren't covered today, but if you would like to learn more about those, please indicate that in the survey at the end, and we'll make sure you're connected with resources. So all participants are on mute. Remember to select your preferred language. If you have questions, the Q&A box is live. If you share that question, please give it a like, give it an upvote, and that will, just like that, that will enable us to know that several of you share that question. At the end, there will be a live question and answer, and then a survey as well. So today you are hearing from me as a member of Solvera, who is in partnership with the California Department of Social Services Refugee Bureau. We're also partnering with Nova Ukraine, who's doing phenomenal work here in the United States as well as abroad. And we have the privilege of having Melissa here from United Way. I've had phenomenal experiences working with United Way and supporting some of their tax programs. So at this time, I'll pass it over to Melissa, who will be our subject matter expertise for the day. Melissa, welcome, and thank you for joining us.
Thank you. My name is Melissa. I have been volunteering for United Way for 12 years now, where we prepare tax returns for free for people on a limited income. And 6 years of that, I've been running the site on my own. So United Way offers safe, reliable, and no-cost tax preparation services statewide to help you avoid costly paid preparer fees and to get the most for your money. And this outline of our topics today are going to be tax basics, common myths and mistakes, tax credits, and tax filing options. Okay, and some glossary terms. Taxes. Taxes are mandatory payments collected from individuals and corporations by the government entity to fund government activities. Okay, and that could be for our roads, schools, programs for helping people that need it, like Social Security and such. Okay. Income taxes. Income taxes are federal, state, and local taxes that may be collected on both earned, which are salary, wages, tips, commissions, interest, and dividends, or most of the federal government's revenue or money it receives comes from these types of taxes. Okay. Now, another common one is a tax deduction. An amount, often a person or business expense, that reduces the income subject to tax. That could be student loan interest. It could be donations to charity, business expenses, home mortgage interest. And this is the fun one. This is the one that really helps a lot of people out. It's tax credits. This is a dollar for dollar reduction in a tax. it can be deducted directly from the taxes owed. This is, for example, the earned income tax credit, the child tax credit. These are the ones that help people that are on a very limited income have larger tax return refunds. Okay. How are the taxes collected? Under the federal and state, they withhold from the payroll. Okay. Under state and federal, people pay into their taxes through estimated taxes. And you'll see also through federal and state, you file the tax returns each year, the 1040, the 540, and for local, when someone owns property, such as a house, they have their property taxes that they pay into. That helps fund the roads and the schools. Okay. Now for your state and local, we all pay sales tax in California. The sales tax is collected to pay for our roads, our schools, and such in our area to help fund things. Okay. And what do these taxes fund? At the federal level, which is all funds everything, okay? At the high level, they fund for our national defense. So if we have troops sent somewhere or we have a war, it funds our Social Security. It funds our Medicare. It funds also our unemployment compensation for people who are unemployed. At the state level, within California, it funds our highway patrol, our road and bridge construction, schools, social programs for the poor and the elderly. Local, it funds for the police and fire protection, our local roads, schools, and their social programs for poor and elderly also. If you are self-employed or you're a gig economy worker, which in the last few years has become very popular with companies such as Uber, Lyft, DoorDash, Postmates, people trying to make extra money, okay? You need to pay your own quarterly taxes is up to 30% to both federal and state. You need to do this since you do not have an employer that will be sending in your own payroll withholding. And you are responsible for the payroll withholding and your self-employment taxes. Okay, you would have to have your own expenses taken out when you file your taxes and stuff. This is something that people make big mistakes and do not do that. And so it's really important if you are doing self-employment work that you make sure you put your taxes off to the side and send them into the government so you do not have a tax liability at the end of the year. So if you happen to work for an employer and you owe taxes, or if you have a life-changing event in your life, these two forms are what you need to update the W-4 for the federal government, and the DE-4. These will tell your employer what kind of withholdings you want on your paycheck. Okay, so you would have the right amount withheld on your paychecks so that you do not owe at the end of the year. So if 1 year you owed, the next, you want to make changes on these so you don't owe for the next year also. That's very important. Okay. California residency for tax purposes. The state of California defines a resident for tax purposes to be any individual who is California for other than temporary or transitory purpose, and any individual domiciled in California who is absent for a temporary or transitory purpose. An individual who comes to California for a purpose which will extend over a long or indefinite period will be considered a resident. An individual who comes to California to perform a service for a short duration will be considered a non-resident. (2003) tax season important dates. Filing deadline, April 15th, 2024. Taxes are due April 15th, 2024 for both federal and state. Personal taxes by April 15th, 2024. The first estimate. So if you're self-employed or you're doing a gig economy job, such as Uber, your first estimate payment is due for 2024 by April 15th. Okay, your extension deadline, you must request it on or before April 15th, 2024. With the extension taxes to file the tax return on October 15th, 2024. That's only to file, not to pay. Common myths and mistakes. Common misconceptions. True. If you do not file, you cannot receive credits. The I-10 are eligible for tax credits. Those with lower incomes without a filing obligation usually make the most money back on their taxes. If you receive a disability, Cal-Able will help you save funds. False. Tax credits are a loan. It is good to receive a huge refund. It's like a personal bonus. You can lose government benefit because of a large refund. Tax refunds and stimulus are considered taxable income. That is also false. These are also all false statements. Common tax mistakes. Not reporting all income, cash received, tips, or doing a cash job. consequences. You can have an audit and have penalties, money you owe the government. Claiming ineligible deductions or inflating amounts of your deductions. Again, audit and penalties, and you owe money. Failing to file or file on time or an extension. You have a late filing penalty. Not filing a tax return when income was earned. Request for return and penalties. Tax credits. Meet Cindy. Cindy is a single mom with 3 girls. Cindy lives in Northern California and works as a medical receptionist. Although she works full-time, she struggled to make ends meet and was living in a shelter with her children. Cindy visited a VITA site and was able to get her taxes done for free. As a result, she was able to secure a stable housing for her family. After filing her return, Cindy's refund was federal earned income tax credit was $5,647. Child tax credit, $4,125. California earned income tax credit, $40. Young tax credit, $202. Her total refund, $10,014. And I will let you know that right now, if you were to file your tax return with the federal government, you would not get your refund until February 28th if you did a direct deposit. Okay. Okay, federal tax credit, earned income tax credit. Requirements: you must file a federal tax return, have earned income between $1,000 and $63,398, file with a social security number, be a U.S. citizen or a resident alien all year. If you are single without any dependents, you must be at least 25, but under the age of 65. Okay. And you cannot be married, filing separately unless you meet an exception. And you cannot be a dependent of another person. You can get up to $7,430 for the federal, the earned income tax credit. This picture shows money. They will never give you cash. It will always be either a direct deposit mailed to you. Okay. Now, the federal tax credit of the child tax credit, you must file a federal tax return, have a qualifying child who is under 17 at the end of the tax year with a social security number valid for employment and who have provided no more than half of their own financial support and lived with the tax filer claiming the credit for more than half the year. Have taxable income of $400,000 or less if you are married and filing a joint return, and have taxable income of $200,000 or less for all other filing statuses. And it's up to $200,000 per child Again, you see the picture with cash. They will not give you cash. It will be a direct deposit or a check mailed to you. Okay. Now, for the state, we have the child tax credit. It can be up to $3,529. And the requirements, it can it's income anywhere between $1 up to $30,950. Work for an employer or for yourself. And you can also have a social security number or an I-10 number. You must file the state tax return for California. You are at least 18 years of age and have a qualifying child, lived in California at least half the year. You cannot be a dependent of another person, and married and filing separately unless you meet a certain exception. Again, no cash will be sent to you. Only direct deposits or checks will be sent to you. And then for state again, we have the young child tax credit up to $1,117. You must file a California state tax return. And they qualify for California EITC, which is Earned Income Tax Credit. Okay. Available for families making less than $30,931, has at least one child 6 years old or younger at the end of the tax year. How much do you think you could receive in returns? Here's an example for this tax year of a family that made $30,000, okay? If that person made $30,000 and they had 3 dependents, they would get $5,647 in federal earned income tax credits, $4,125 in child tax credits, and then they would get $9,772 for the federal total refund. They would get $40 for state earned income tax credits and $202 for the young tax credit, and their total state refund would be $242. Altogether, that'd be $10,014 refund. For 2 dependents, you have $4,821 for federal earned income tax credit, $3,077 for child tax credit, a total of $7,898 for federal, $40 for state earned income tax credit, $202 for young tax credit for state, total of $242 for your tax refund for state, altogether $8,140. If they just had one dependent, $2,642 with the federal earned income tax credit, $1,000 $77, child tax credit, $3,719 for total federal refund, and $40 for state earned income tax credit, $202 for young tax credit for the state refund, $230. Total, $3,949. If they had no dependents, there would be no refund there would be no tax credits for the federal government. For state, there would be a $28 earned income tax credit. Nothing for the young tax credit. Total refund for for state would be $28 with a grand total of $28. Okay. What tax credits do you qualify? Taxes to 211-211. Filing options. Find filing help. myfreetaxes.org. File on your own, quick and easy. File with virtual help or schedule in-person help. Filing option 1, in person, VITA, Volunteer Income Tax Assistance. Individuals or families making $79,000 per year or less, taxes done in person for free with a trained VITA volunteer. This is what United Way does. I run a site and we helped 31 clients this Saturday file tax returns. And I saw a few tax returns that had almost $8,000 worth of refunds. Okay. Option 2, virtually getyourrefund.org. Individuals or families making $79,000 a year or less, you receive taxes done by free by VITA volunteer through getyourrefund.org. Okay. Option 3, taxslayer.com. Requirements, none. An online platform to file your taxes on your own. Okay. Option 4 is the paid service. Look for a tax, number 1, qualification and credentials. Look for a tax preparer with appropriate qualifications such as a certified public accountant, an enrolled agent, or a tax attorney. These professionals have specific training and are authorized to represent taxpayers before the IRS. Number 2, experience. Choose a tax preparer with relevant experience, especially if you have complex tax situations. Someone familiar with California tax laws and regulations may be particularly beneficial. Professional memberships. Check if the taxpayer is a member of professional organization, such as California Society of CPAs or National Association of Enrolled Agents. Membership in these groups can demonstrate a commitment to staying informed about tax laws and ethical standards. Prepare a tax identification number, or commonly known as P10. Ensure that the taxpayer has a valid P10 issued by the IRS. A P10 is required for anyone who prepares federal tax returns for compensation. fee structure. Understand the tax preparer's fee structure up front. Avoid preparers who base their fees on a percentage of your refund, as this could create a conflict of interest. Get a clear understanding of all fees and charges associated with their services. Record of compliance. Check the preparer's history with the Better Business Bureau and any relevant state licensing boards. Look for any discrepancy, actions, or complaints. Refund options. Be cautious. Tax preparers who offer to provide your refund in advance, as this might involve high fees. The safest option is to have your refund deposit directly into your bank account. Electronic filing. Ensure that your tax preparer offers electronic filing, as it is a secure and efficient way to submit your tax return to the IRS and state agencies. Red flags. Be cautious of tax preparers who make unrealistic promises or guarantees regarding your tax refund. Also, be wary of those who encourage you to take questionable deductions or credits. Okay. And who do you trust to prepare your tax return? Choose your tax return preparer wisely. If you pay someone to prepare your return, they hold significant responsibility for the accuracy of your return, and by law, they must sign and include the prepared tax identification number, or PTIN, on your return. While they sign the return, you remain accountable for every item on it. And you can scan and get more information about that from the IRS. Okay. Available resources, all the information you need about filing taxes is all in one place. And you can visit uwccr.org/tax help for guides and tutorials to help you through each step of this process. And you can also scan there, and the IRS can tell you local VITA sites in your area also. And the next step after this session, you will receive the slide deck, reference links, surveys to provide feedback on today's sessions, ask questions, and suggest future topics.
Melissa, thank you so much for covering some of the tax basics here in the United States. We have had a few questions come in.
Okay.
And so let's start with the first one. They say, good afternoon. If a single person received benefits throughout 2023 and had no income, do I need to file a declaration?
When they're saying benefits, what kind of benefits?
Let's assume for this question that they mean public benefits, such as TANF
Welfare.
or CalFresh.
Okay. If they're getting public assistance, okay, as long as it's not unemployment.
Correct.
Okay. If they're getting welfare and stuff like that, they don't need, or CalFresh, they do not need to file a tax return. But if they are receiving unemployment, then they need to file a tax return.
And so let's pause for a moment and distinguish the difference between then public benefits, and unemployment. So public benefits are going to be maybe when you first arrived, you enrolled to receive just basic, food, a little bit of funds for as you're, going to ESL and work and things like that, or maybe searching for a job. That's going to be considered public benefits. Unemployment over here is a separate form. It's a separate process. It's even a separate department within the government. So unemployment would be for individuals who have been maybe laid off or were unable to work due to a medical condition. Often unemployment is when you get a certain percentage of the income that you earned in prior quarters, prior time. I'm assuming that most individuals on this call have been receiving public benefits, but likely have not been here long enough to be receiving unemployment or have been through those circumstances.
Okay.
And so we do have a question about unemployment.
Sure.
They say, my husband is getting unemployment benefits. Are we supposed to get any forms from them before we file our taxes?
Yes, you are. Unemployment is taxable for federal purposes, not for state. And you should be getting a 1099-G anytime now.
Great. Thank you. Another question. And everyone, thank you so much for asking these questions. We are here to answer them, so please keep them coming. And feel free to ask them in Ukrainian or Russian as well. So Melissa, this question says, there are many families who are still waiting for their work permit, but they still have to make a living and are working and getting paid in cash. In that case, should they still file tax? They should still file taxes, correct?
Yes.
And so let's talk about that for just a moment. There is potentially no record, right? They've been being paid in cash. So remind us again, what would happen even if there's no record because they've been getting paid in cash if they did not report that and file taxes, right? That's something that we went over on a previous slide. So just as a reminder, you could receive a penalty for future years.
There might not be a record at this moment, but the government could come back and ask and do an audit and ask how you purchased such items or how you fed your family or survived during that time frame.
Right. So thank you for that question. The answer there being, if someone or a household is only receiving cash income, do they still need to file? And the answer is yes. We have another question that has come in that we're working on translating right now.
Okay.
If a wife left the US on April 25th, resides in Europe with only child, do we need to sell a joint declaration together? So so an individual is here, they are married, the wife and child are in Europe. Do they need to submit a joint declaration together?
She left April of last year.
2023 is what I'm going to assume. Yeah.
Okay. Is she permanently gonna stay there, or is it for transitory purposes?
So I'm not sure. Let's answer both ways. So a married couple, a wife is in Europe, and let's say she's going to stay in Europe. So scenario one, do they need to file jointly as married?
That's a hard one because you're getting into international law.
So for this one, I'm going to suggest that the individual who asked, please go to a VITA site or work with a tax preparer that we have mentioned, who you'll be able to ask those really specific questions to that can help you out.
Actually, it's above even a VITA site.
Okay.
Because
so then there are resources online that you can go to, or paid tax preparers. And we did spend a bit of time reviewing what you should look for to make sure that you have an expert to work with.
Yeah, because it'd be difficult because the IRS part of it with the wife, I don't know what they can do. And because they might have to file married filing separately.
Sure.
I think.
Another question has come in, and
Okay.
it says, are there any federal, state, or local taxes for having pets like a cat or a dog? If yes, where can we learn more about how to calculate and file for them?
You can't claim your pets, unfortunately. The only taxes that you would have is a lot of times you have to file taxes, register your pet in your county or your city and do it locally, but you don't, like, in my city, I have to have my dog registered. It just depends in your area.
So the answer there is no. You do not need to file taxes on behalf of your pet. You cannot claim them as a dependent. But as always, look in your local area. Often pets should be registered, and they will commonly want to see if it's a dog, a rabies vaccination with it as well. All right, another question. What if you lived in 2 or 3 different states during 1 year? So that's a common occurrence right now.
You would fill out a part-time resident for California with how long that you're in each state.
And would you need to file separate state taxes in each state?
You would file separate tax returns for each state that you're in there for how long you're there for.
Great. Another question. If a Ukrainian refugee arrived in late August 2023 and are getting paid in cash for their work, what paperwork do they need to take to their tax preparer? This is assuming they do not have a W-2.
They would bring whatever receipts, whatever documentation they have, any expenses that they have to offset the cash that they received.
And if that, let's just say maybe that is not readily available, they want to go, they want to complete their taxes, but they just have maybe a self-attestation. Like, listen, I made this much in cash.
Mhm.
Is that an option?
The tax person would probably appreciate in writing, if it was something written down that on this day I got paid this and that.
So it would be okay if the individual came maybe with just a written kind of ledger that says that they wrote, saying, maybe the
Yep.
date and the payment that they received, and maybe just sign that at the bottom.
Yep.
Great. Thank you, Melissa.
No problem. I've done tax returns because of that way myself.
You're so experienced. I'm glad you're with us today. All right, we have a couple more moments. While that is happening, we're going to go ahead and post the link for the survey for today. Please feel free to scan with a QR code what's on here. We value your feedback. And also, if you have additional questions, you can ask them there, and we'll do our best to respond. What other questions might we have? Taxes can be confusing. For instance, if you had a child during the year that you've lived here, so let's say you're 2 adults, married, you have 1 child, and then you have another child during 2023 while you're here. What should you do?
You get to claim the child even if you have it on December 31st for the full year.
Oh, great. What about if you lived here, but your partner, so your spouse, maybe your husband, is in another country? So technically you're married, but that individual maybe has not been here in the United States. How should you file?
If it's you and a dependent here, I would say, okay, if it's you and your dependent and it's been more than 6 months, I would say file head of household.
Mm-hmm.
You would have that ability to file head of household, because you can't file married with them being in Russia. I don't think we could do that one with Russia.
Sure, Russia or Ukraine, or they
Right.
may be residing in another country at the moment, they're just not here in the US with you.
Right.
Great. Would you be able to briefly, I'm going to ask a couple questions about the statuses. So you mentioned you could file head of household, but that was different than filing married. Can you describe how the relationship between those two, and can you claim both, or do you have to pick one?
Head of household is for somebody who is managing a household by themselves. There's only one person. I mean, almost like a single person having dependents. Or a husband and wife, but let's say the husband's in a different country and it's been over 6 months that they've not been together. Then they can file head of household because they have a dependent.
And would someone need to claim the money that they receive from public benefits as income?
No. No,
Great.
no. And if you do not have a social security number and
Mhm.
you apply for an ITIN number,
And
that does,
I-10 means individual tax number, right?
yes, individual tax
Thanks.
identification number,
Mhm.
that does not affect your immigration status. Matter of fact, it helps because that advises, that will advise them that you're trying to do your part in doing what you're supposed to by filing your tax return.
So even if you don't have your social security number yet, if you've earned income during 2023, go ahead and file. That will reflect positively on the future should you want to extend your stay through legal means.
Yes,
Great.
and
Are
you
there
need,
any immigration statuses that should not file taxes?
it's always in your benefit, one, to file
Mhm.
taxes if you've been working, because any withholding that is due to you because of overpayment, you can't recoup it unless you file a tax return. Or two, if based on your income, you have the ability to get credits,
Mhm.
such as the earned income credit, such as the
Yeah.
child dependent credit. You don't have access to those things unless you file.
Yeah. All right, two final questions as we wrap up, as we're nearing the top of the hour. The first question, could a head of household claim their unemployed full-time adult child who is over the age of 23 living at home?
Only if they, you can claim them up if they're going to school.
Right, full-time student is what the individual is saying. So we have
Okay,
a 23-year-old living at home going to school.
you can do that up until they're 26. I'm sorry, all the way through their 25th birthday.
Great. And the final question here is, if you receive cash assistance from a resettlement agency, such as the International Rescue Committee or World Relief, do you have to report this as income? Melissa, before you answer, I want to explain that all refugees who come to the United States work with what's called a voluntary resettlement agency, who the money flows from the federal government down through agencies, down to resettlement agencies that provide that provide some funds to clients directly, often for things like housing, food, um, really basics.
Um,
Mhm.
from my understanding, isn't it almost like a grant?
It's similar to public assistance. So
Yeah.
it's very similar to what you would receive through the county.
Yeah. So no.
Right. And the final question, we have one really good one here as well. How do you declare donations?
Okay. So if you are making donations, you can donations can be claimed at this time only if you itemize
And
on
can you explain
your taxes.
briefly what itemize is on the deductions?
Okay, so you have two kinds of, you can do a standard deduction where it just says, okay, this is I'm gonna file married filing joint and it's gonna be this amount. Or I'm going to do itemized where I say, I spent this much on medical, I spent this much on my mortgage and interest, this much on my car, vehicle licensing, and this much on my donations. A lot of times right now, it's very difficult to itemize for most people. I was trying very, very diligently to be able to do itemized deductions myself on my tax return, and I wasn't able to because I had a lot of donations.
Sure. Well, thank you everyone for your time today. We really appreciate it. Melissa, you are a wealth of knowledge. Thank you for spending time with us in today's session.
No problem.
Everyone, a reminder, our next session will be covering housing assistance for newly arrived Ukrainians. And scrolling up here, that will be on the 26th. These slides will be sent to you along with the links that were in today's session. And a recording of this will be uploaded onto YouTube. So thank you, everybody. And we look forward to seeing you for the Housing Assistance Program highlight. Melissa, again, we really appreciate you and hope everyone schedules an appointment with the United Way VITA site to help them prepare their taxes for free. Take care, everybody.